These names tend to have more stability than small-cap stocks. If you're looking for a stock you can buy and hold for a long time, then these mega-cap stocks to buy fit the bill. Eli Lilly. If the Food and Drug Administration signs off on Mounjaro being used as an obesity drug, then Eli Lilly could see revenues of $25 billion a year. ExxonMobil. Earnings for the fourth quarter continue the company's track record of impressing analysts. ASML Holding. It's the sole manufacturer of extreme lithography photolithography machines that are used to make the most advanced semiconductor chips. Chevron. The company's bringing in big quarterly earnings as of late on the strength of the high price of oil and pressures in the natural gas market. United Health Group. Historically, health insurers have managed to defy expectations even in a recession. Visa. Credit card debt is pushing household debt up by its fastest rate in 15 years. AbbVie. Analysts believe that its Skyrizi and Rinvoq drugs will bring in a combined $15 billion a year in revenue. Let's dive in. Here are the 7 mega-cap stocks to buy for the long haul. Welcome to Timely Investment Research. If you're worried about volatility, mega-cap stocks might just be a viable solution. For a lot of investors, the recent ups and downs of the stock market can be a little jarring. Personally, I don't mind the dips and valleys because every downturn is an opportunity to get good stocks at a discount. But there are others who have a lower risk tolerance, unsure, and are looking for stocks to buy that have a built-in safety net. One such avenue is the world of mega-cap stocks. Mega-cap stocks are those with a market capitalization of more than $200 billion. These are well-established companies that have a lot of money behind them. Generally, mega-cap stocks are less volatile than small-cap stocks, which are more populated by growth companies. Mega-cap stocks already had one or more major growth spurts. Of course, buying a mega-cap stock isn't foolproof. There are still plenty of duds in the mega-cap world, and as an investor, you have to know how to pick out the good from the bad. If you're looking for a stock you can buy and hold for a long time, then these mega-cap stocks fit the bill. Number 1. Eli Lilly. Eli Lilly was one of the best pharma stocks on the market in 2022, rising 35%. While it's down about 12% so far this year, investors shouldn't be overly concerned. In fact, they should be pretty excited because this is a unique buying opportunity for a top mega-cap stock. Eli Lilly is ramping up production of its type 2 diabetes drug Mounjaro. If the Food and Drug Administration signs off on Mounjaro also being used as an obesity drug, then Eli Lilly stock is going to take off again. UBS analyst Colin Bristow says obesity sales could bring $25 billion in revenue annually for Mounjaro. Eli Lilly has a market cap of $311 billion. Number 2. ExxonMobil. Strong oil and gas prices in 2022 pushed ExxonMobil stock to new highs, even though the price of oil dropped to less than $80 per barrel from more than $100 in the first quarter of 2022. ExxonMobil stock is still riding high. It's up 42% in the last 12 months. One of the things I like best about Exxon is that it's cutting its costs. In fact, its aggressive cost reduction plan has ExxonMobil on track to double earnings relative to 2019 by the year 2027. That's going to help Exxon add to its dividend and buy back shares, actions that will reward investors. Earnings for the fourth quarter continue the company's track record of impressing analysts. ExxonMobil topped expectations with revenue of $95.43 billion and earnings per share of $3.40, beating expectations of $90.77 billion in revenue and earnings per share of $3.28. Exxon has a market cap of $450 billion. Number 3. ASML Holding. You may not know about ASML Holding, but you've likely benefited from its products. The Netherlands-based company is the sole manufacturer of extreme lithography photolithography machines that are used to make the most advanced semiconductor chip. The company claims that its customer includes all the major chip makers, so if you're looking for semiconductor stocks, ASML should definitely be on your list. And while the company has been battling supply chain woes that delayed some production starts, and more recently is seeing rising inflation cut into profit margins, ASML continues to churn out impressive returns. Revenue and earnings per share for the fourth quarter beat analysts' expectations, coming in at $6.43 billion and $4.60 per share, versus estimates of $6.35 billion and $4.33 per share. With a market cap of $257 billion, ASML Holding stock is up 21% in the last 6 months. Number 4. Chevron. Another of the major oil and gas conglomerates, Chevron enjoys many of the same tailwinds as ExxonMobil. The company's bringing in big quarterly earnings as of late on the strength of the high price of oil and pressures in the natural gas market. Earnings for 2022 were a whopping $35.5 billion, compared to $15.6 billion in 2021. Investors got paid too. Chevron paid out $11 billion in dividends and returned another $11.25 billion back to shareholders in the form of share buybacks. Chevron stock is up 16% in the last year, and analysts think it's got another 20% upside with a consensus price target of $194. Chevron has a market cap of $313 billion. Number 5. United Health Group. Minnesota-based United Health Group has the distinction of being the largest health insurance company in the U.S. It serves 129 million customers through its Optum segment and another 51 million customers with the United Healthcare segment. Health insurance is a key segment for investors who are looking for long-term growth and stability. The U.S. population is aging, with the percentage of people older than 65 expected to increase from 16% in 2019 to 21.6% by 2040. If you're concerned about volatility in the stock market, health insurance is a good place to be. In the last 3 pre-pandemic recessions, the S&P 500 declined an average of 27%, but the S&P 500 Healthcare Index rose by 14.2% in those periods. Earnings for the fourth quarter were $82.79 billion, beating expectations for $82.53 billion. Earnings per share was also a pleasant surprise, coming in at $5.34 per share versus expectations of $5.17. United Health Group has a market cap of $459 billion. Number 6. Visa. Visa makes its money by collecting fees from banks and other financial institutions to issue credit, debit, and prepaid cards, and it collects money from merchants based on the volume of goods and services bought with Visa cards, so it makes its money on both ends of the transaction. Visa is one of the best-known payment processors in the world, connecting merchants to customers in more than 200 countries. Earnings in the fourth quarter were another win. Revenue of $7.94 billion and earnings per share of $2.18 beat analysts' forecasts for $7.7 billion revenue and $2.01 earnings per share. Visa has a market cap of $464 billion, and the stock is up 6% in the last 6 months. Number 7. AbbVie. Biopharmaceutical company AbbVie is undergoing some transition, but investors shouldn't be worried about the company's future. The Illinois company also boasts a strong drug pipeline that's been bolstered by its purchase of DGS Antibodies, a UK company that specializes in immunology treatments. It's also been boosted by a series of regulatory victories. While fourth quarter earnings narrowly missed analysts' expectations on revenue, $15.12 billion versus an expected $15.3 billion. AbbVie beat expectations on earnings per share by 2 cents, recording $3.60. AbbVie has a market cap of $269 billion. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.